Appreciate you all making the time for, I'm sure, what is going to be the most riveting segment of this Wealth Tech Conference as a whole. There's a lot of interesting developments that obviously happen in the crypto, blockchain space, let alone DeFi. As someone who's been covering the space and been invested initially since 2013, it's pretty mind-blowing to see the progress, as well as obviously lack of, which I'm sure we'll be touching on this panel. I think we should also give a shout out to Endow Us. It's good to see a Singaporean wealth tech champion carving up over $2 billion. I don't know about you, but it kind of gets a little bit annoying to keep seeing US VCs getting all the highlights. So good to see some homegrown talent taking it as a whole. So my initial thoughts were to at least start with a definition of DeFi, because before you can really talk about something, I think it's important to at least know some parameters and frameworks kind of around it. And it took me quite a while to put something together, but I thought what was actually better was to pass it to our esteemed panelists here as a whole. So we're going to do a few kind of quick introductions. I'll let them speak, giving some context to themselves, some of the firms that they've maybe worked at, and obviously who they represent today up here. We'll then have a few direct questions to each and one of them, and then we'll open up for a little bit of each one of them to be able to kind of kick in. And then, of course, we got a whole bunch of questions from the audience as a whole. So with that, why don't we start at the top end with some intros, please.
Thanks so much. Hi there, my name is Gerald. I'm a co-founder and the CEO of Singapore for Sygnum Group. Sygnum is the world's first fully regulated digital asset fintech group. We operate out of headquarters here in Singapore as well as Switzerland. And on these two platforms, we serve a global client base of over 1,300 institutional investors, corporates, high net worth individuals, and other financial institutions. When we say we are a fully regulated digital asset financial institution, that means that we operate under a variety of licenses. In Switzerland, as I mentioned, we have another headquarters. We operate under a universal banking and security dealers license. And here in Singapore, we operate under a collection of capital market services licenses around the activities of fund management, corporate finance advisory, dealing in capital market product, as well as custodial services. So collectively, these licenses allow us to administer on our clients' behalf also over $2 billion worth of assets under administration, comprising primarily of crypto assets, but also fund products as well as traditional securities. That's Sygnum in a nutshell. Thanks, Kay.
Thank you.
Excellent. Hi, good afternoon. My name is Jeremy Ng. I'm the co-founder of Open Eden. We're a fintech startup that is building a regulatory-first blockchain-enabled debt marketplace that connects institutional capital to Web3 or digital asset builders. And our flagship product is a transparent and compliant and risk-managed high-yield cash management product that's MES registered. So my partner and myself, we came from traditional finance and crypto world. So I personally spent 20 years in investment banking. I was heading Goldman Sachs Asia structured product business before starting out Gemini Crypto Exchange Asia business here in Singapore. So really glad to be here. Thank you, Endow Us, for inviting me.
Thank you. Katherine?
Hi. Hey, everyone. My name is Katherine, and I head up TZ APAC, which is the Asia adoption entity for the Tezos ecosystem. So what's Tezos? Tezos is a pioneering proof-of-stake layer 1 public blockchain. We've gotten over 70 million smart contract calls to date, over 2 million funded wallets, and really excited to be on this panel with my esteemed panelists. I'm happy to share my experience in crypto in the past 6 years. Thanks.
Thanks, Katherine. Anton?
Hi guys, I'm Anton. I'm the head of Fintech and Innovation for KPMG internationally, based here in Singapore. I'm a Kiwi originally. I've got some experience working in this space for a number of years across capital markets, supply chain, looking at things like payments as well as the fabulous ripples of this world. But very excited to be here on this particular session because DeFi, that's where it's at, right?
Yeah, well, I guess that's going to be the question. So Before I ask you guys for your 20, 30-second definition of DeFi, if you're going to give it to your 8-year-old nephew or kid or whatever, which is going to be challenging by itself, but obviously we saw the Bitcoin white paper in 2009, right? Which timing was pretty circumstance given that we had the great financial crisis, as we know for those of you who were trading markets then. Following that, we had Ethereum coming through in 2014, which was the rise of the smart contracts. 2017 obviously saw ICOs, the first kind of initial hype, if you will, from a mainstream perspective, and of course this crypto bear market for about 3 years, which saw the rise of DeFi, right? So with that said, and just again starting from the bottom with Gerald, what's your 20, 30-second definition of DeFi?
Yeah, I mean, I think the definition is in the name, right? Decentralized finance. We describe a new form of consuming financial services on a more decentralized basis, or more peer-to-peer basis, without the need for centralized intermediaries. And this might take the form of interacting with smart contracts, or other more sophisticated use cases. For example, providing liquidity into automated market makers and the like. Yeah.
Jeremy? It's going to get harder and harder as you come down, but.
Hey, see, you tested us. You didn't put this in the pre-read. So
yeah.
Thank you so much, Kate.
I tossed all that out, man. Don't worry.
I think just to add on that, maybe just one point, right, for decentralization, apart from the fact that it is taking the decision making, from one or two organizations, to the hands of individuals. I think the way I think about it is really democratization, right? That everybody will have the ability to consume or to access certain kind of offering or products, in this new format. And I think at the end of the day, you try to achieve the goal of, being more efficient, having cost savings, and everyone will have the ability to participate.
Thank you. Anything to add, Katherine? Or a different skew?
Yeah, I'll add on to what Jeremy mentioned about open participation. So with proof of stake governance, staking is part of a crucial mechanism in gathering consensus on chain and upgrading the chain in a smooth manner. So with the Tezos protocol, on chain, we've actually had already 10 smooth upgrades with the community without hard forks. So essentially, the developer teams in Tezos pioneered this core DeFi concept called staking. So this is where users lock up their crypto assets into smart contracts, and then they get rewarded in crypto as node validators for two crucial functions. One is to help secure the network and be rewarded for doing so, obviously, and also to enable community governance on chain so that they can validate transactions and pass proposals as one ecosystem. So this is where, of course, Ethereum is moving towards a proof of stake mechanism, which will hopefully go live by end of September. But we have to think about if, for crypto curious participants such as yourselves in audience, like what sort of chain would you want to be a part of? With Ethereum, it's generally, their upgrades have been generally quite contentious with hard forks and rife with uncertainties. But then with Tezos, it's always been like a 99% uptime. That's boring, but we have smooth, stable upgrades. So that's my take. Thanks.
Awesome. Anton?
I think it's the, actually I'll go with Gerald at the bottom, I must be at the top.
Yeah.
So it's the system-wide decentralization of traditional finance structures. So we exist on central clearing parties right now, banks, central banks, and I think part of the notion of the technology is to try and distribute that around trusted counterparties using smart contracts and all that sort of good stuff. Whether it'll actually turn out being like that's a different story, but that's the concept at the moment.
Okay, awesome. Anton, you've obviously been, amongst other things, global fintech head at KPMG. You actually represent the oldest institution up here on this panel, right? But with that said, we've actually had an insane boom in the DeFi space, as a lot of people know in this audience. A lot of that has been homegrown talent here in Singapore, which we're very proud. In fact, Singapore is one of the, I guess you could say, key nodes in regards to crypto talent, know-how, and expertise, as I'm sure you know. We've also seen, quite a bit of earthquakes also as at the back of that, and regulatory push, and rightly so, with the likes of Three Arrows, Luna, and so on and so forth. But with that said, what would you say are some of the benefits for DeFi and blockchain businesses here in Singapore and other countries in Asia as a whole?
Well, a couple of things. For a start, you mentioned Terra Luna, so that'll get me started. That's my trigger phrase at the moment. But it's interesting to see that Luna just suddenly spiked, or the second version of Luna suddenly spiked for no reason last Friday night. And I think the sort of whole speculative element of that part of the industry is not good for people who want to create sustainable businesses. And I look at people on this stage here, they all want sustainable long-term businesses. So in that respect, I think the regulator here is very right to call out speculation as being the enemy of innovation as we move forward. But certainly I have a lot of respect for the talent that's invested time and effort in this particular part of the industry. It is our future. The technology is undoubtedly brilliant. The business models are less so. But where I see Singapore really excelling in the future is what sits in this room and beyond. We are an ecosystem. Our network effect is generated from investors, from talent, from founders, from regulators, from banks and the legacy institutions, all participating in this experiment that is the decentralized finance right now. And the other interesting sort of concept about Singapore, you mentioned Switzerland earlier on, is actually we're a small island in the grand scheme of things. We're not big. We're impressive. We're smart. But actually we're dwarfed by larger neighbours sitting outside this region. So we have to participate in the talent capital and trade flows around the world. So West Coast of the US being major shareholders in DeFi here is a good thing. Switzerland, the Nordics, London, all being part of that is great as well. And I think that's where we need to kind of embrace our experiment here in Asia has been actually perversely more international to be able to get more domestic and regional benefits. But forecast going forward is, this is going to be the growth part of our industry. It's going to hollow out a lot of the traditional rails that we see in the market. And we should expect to see over the next 10 to 15 years this really progress. In the next 5 years, I still think we'll be working out how it works systemically before we actually get to that point.
No, fair point. You've already touched on one of the questions I wanted to touch on, but with that said, and I know this is tough, but again, looking out, and you've seen a lot of cycles. We all knew the hype in fintech. It was supposed to revolutionize and change banking, and I think that was, from 10 years ago. Sure, of course. I guess it's debatable, but yes, it's definitely making impacts, right? But maybe not on the line of what was alluded to, as is generally the case with these things. But with that said, and going back on how you see the development here in Singapore, do you think there's maybe some pockets specifically in DeFi that will have maybe more tailwinds? Others maybe will have more headwinds, just from a consumer kind of perspective. I mean, does anything stand out one way or another, or is it still a little bit too ambiguous at the moment?
So look, we looked at the investment trends over the last 3 quarters for the industry globally. No surprises here. I think we're all following the markets, right? So the last quarter was pretty terrible for inward investment into the space, apart from actually some of the underlying. So where are the smart investors putting money? It's in financial market infrastructure right now. It's actually not that easy to change a large financial system without having reliable infrastructure sitting behind even decentralized finance. So that's one area I think is going to continue to grow. Digital identity obviously underpins all of this. We still have regulators, banks and other key players who actually own the liquidity in the market, who are very concerned about money laundering, scams, fraud. We've seen all the losses that come out of that. You mentioned ICOs earlier on. I don't know where all that money's gone, but it's certainly not gone to the people who invested. So this is a big part of the industry which is being invested in right now. I think that'll be critical going forward. And then you look at some of the protocols that are actually going to help on-chain and off-chain, start to work a lot more closely together. Those have been key for investors over the last sort of 2 quarters as well. So maybe some of the stable coins, the retail stuff, the algorithmic backed has taken a real punishing, and so it should have. But I think smart investors are now saying, actually, we're going for system-wide change. We need the institutional banks, we need the institutional market infrastructure to be able to be ready to embrace whatever use cases come down the pike. Certainly, if you look at MAS, no surprises, we all follow the MAS. They've put a lot of money into, tokenizing assets on Guardian. They've announced that with our friends at JP, etc. I think Partior is exceptional in how it's taking Uber into reality on cross-border payments, solving a real-world issue, which is small and medium-sized enterprises really struggle on liquidity and working cap. So I think, again, those areas are going to have tailwinds from the regulators. And I would argue probably as we sort of progress through this, we'll see more areas of, open up, not just here in Singapore, but once the regulators get their act together globally, and they're all over the place right now, give it about 18 months, I think we'll see the GFIN, the big 8 regulators work in lockstep to actually then start to provide the basis for proper regulatory and risk managed infrastructure and change.
Fantastic. Thanks, Anton. Katherine, so Tezos, Web 3.0, DeFi economy, you're up here representing one of the true ecosystems in the space, of course. How do you see that playing out over the next 6 to 12 months, next kind of 3 to 5 years in regards to, the evolution?
Yeah, well, that's a really, really long question, so I'll do my best to
perhaps.
unpack
Maybe
it.
top 1, 2 things that kind of come to mind, right? Because there's a lot of dynamic stuff.
Sure, no problem. So I'll share a little bit about how blockchain ecosystems can help contribute to the Web3 economy. So starting off with Web 2, right? With the Web 2 space, you have these closed loop applications, Web 2 applications like Gmail or Outlook. They're built upon open protocols like TCP/IP, HTTP, SMTP, etc. But with the Web 2 model, you get to use these apps for free. I mean, Gmail's for free, but Google mines your data and then sells it to advertisers, right? So as the saying goes in the Web 2 space, if you're not paying for it, you're not the customer, you're the product. So with the Web 3 economy, open source communities, even within Tezos, Ethereum, etc., and individuals as well, rather than being monetized as a product, we are incentivized and rewarded in crypto to maintain and develop core infrastructure, which is what our blockchain ecosystems are made of. So this is where evolution is. And innovation is a constant in our space. You have people like Jeremy and you have people like Gerald building on top of core protocol layers like Tezos. In fact, it's very important to actually find the right founders and backers to build with for any core protocol layer. And with the DeFi ecosystem, it's really important that whether you're a node validator, whether you're delegating your assets to a baker, in the Tesla ecosystem, we call node validators bakers, to ensure that, okay, is this accredited? Is this platform KYC and KYC compliant with regulators in your local jurisdiction? These are all things to think about as we have more institutional liquidity coming to the space in addition to retail liquidity. It's also a very interesting space if you're looking into alt assets because someone on the earlier panel was talking about how traditional finance, traditional capital markets have completely already have been extracted of their value, and so people are moving, especially individual investors, into the alt asset space or digital asset space. So this is a very interesting space to play in, and as an ecosystem builder, I would love to see more innovative financial products being built in the DeFi space, and look forward to collaborating with my panelists on this.
All right, awesome. So just on this concept, we're always hearing, leveraging the power of blockchain, the ecosystems, Web 3.0, and there's obviously a lot of smoke and mirrors. But what would you say? And maybe there's 2 ways of approaching this, but what would you say are going to be the 2, 3 main things that businesses and governments can do to really leverage the power of blockchain correctly, net, right? What would you say is maybe the top 2, 3 things that they can actually do very, very wrong to not tap into that? I'll let you take the skew you'd like on that.
Yeah, so the way the space has evolved over the past 6 years when I've seen it grow, back then, it was all about Bitcoin, as you mentioned, the white paper and financial inclusivity. And now it's about, okay, how can enterprises come in and utilize blockchain for their businesses? So I'm thinking the best way is smart contract functionality, just leverage trust minimize agreements, make sure that you have security benefits, select the right network. If you want to choose to build on a public network, that's great. If you want to choose to build on your own permission network, that's also fine, except the trade-off is that public networks are a lot more battle tested. You get to see more hacks happen, yes, but at the same time, you get to also stress test your network. Yeah. So with scalability and innovation, you get, of course, more speed of execution, higher TPS, uptime benefits, and a lot more. Anton has already mentioned PAR-TR, which I think is a great use case for cross-border payments. We also have startups in the space also working on safer ways to pool liquidity to avoid another Terra. How do we build more sustainable DeFi products that are with proper risk management processes in place? Yeah.
Awesome. Thanks, Katherine.
No problems.
So we're going to mix it up, and we'll actually jump over Jeremy and go straight to Sygnum at the end with Gerald.
Thank you.
Gerald, big fan of Sygnum. One of my besties has just joined you out in Switzerland. If I recall correctly, I believe you were also one of the first banks to be licensed globally, if not the first out of the US. And with all of that kind of said, a lot of what you guys do evolves and deals with trust, right? Not just being Swiss kind of in the DNA, but what can you talk about, trust, the importance of it in what I feel is a very it's increasingly nationalistic world, increasingly by, polarization, friction. So, within the blockchain space, how can companies cultivate, foster, and maintain trust amongst stakeholders? Because that's obviously what Web 3.0 is, right?
Yep. Okay, I think it's a great question, also very timely. I think the audience assembled here, you guys come mostly from traditional finance, asset management, and some of the concepts that we're describing seem a little bit esoteric and far removed from your day-to-day. I can assure you it's not, right? Like in many ways, and I think we speak at Sygnum with now 5 years worth of interacting with the market, providing institutional investors, corporates, high net worths with means to on-ramp into crypto and digital assets more broadly with complete trust and peace of mind. And we've seen, certainly in spite of the recent bear market slump, that the pace of institutional adoption continues unabated. So it might be a little bit far removed from your day-to-day right now, but I can assure you that your clients, many of them are already invested. If not, they're actively looking to invest. And one of the things that has come out of the recent market correction has been increased scrutiny and a regulatory spotlight on, I think, some of probably the bad actions and some of the bad behaviors in the space, to put it mildly. I think we've seen, that for some, in particular, the unregulated segment of the crypto and digital asset market more broadly, there was an absence of risk management, and I think generally a lack of sound corporate governance. And in the end of the day, it was mainly the man in the street, the retail investors, that were left holding the bags. So for me, the way we rebuild as a community, I mean, firstly, we need to acknowledge that there's been a loss of trust. And many of the folks that invested, especially on the retail side, were not perhaps aware of the risk that they undertook when they parted with their life savings or portions of their savings to invest in the space. So the space needs to rebuild and regain that confidence. I think the first thing that digital asset companies should do is to be aware of the regulatory environment, the regulatory rules that apply to their business models, and ensure that if they need to be regulated, they should start the process of obtaining the necessary licenses to do that. We see increasingly more of the activities and more of the flows inexorably moving towards regulated players rather than unregulated players. Sygnum, for example, just to name it, to put it out there, we're not just regulated in Switzerland as a payments provider or with a secondary license. I think we undertook the hard yards of obtaining a bank license because for many of the activities that we provide the market in Switzerland, they require a banking license. I think if you are offering credit and lending services, if you are taking crypto as collateral and giving out loans against it, which some of the names that you might have heard, like the Celsiuses and the Voyagers of the world that are now going through bankruptcy process. Many of them were undertaking these activities with actually no license to back them up. And I think this then lends itself to abuse, and it lends itself to a situation which they're facing, which is more like akin to a run of the bank. Because Sygnum is regulated as a bank in Switzerland, for every loan that we disperse, we have to hold regulatory capital against it. And if you think about it, that makes a lot of sense, right? Because you need the rules that apply to banks everywhere nowadays, the Basel III Accords. Those rules were hard-won, but they were instituted after hard-won lessons from decades worth of incidents and bank runs, and they are protections that banks then need to put in place to protect their customers from any cowboy type behaviors. And so I'd like just to mention one data point, which is we had the situation where of a contagion effect, a domino effect, where lender after lender, it seemed, was going under on the crypto space. But throughout this entire time, with the markets collapsing at one point by 70-80% from their peak, Sygnum Bank in Switzerland continued to have zero hard margin calls, right? Zero forced liquidation of client collateral. And we didn't do anything special. There was no special algorithm. I think most people think that's some technology solution that can come and save the day. It's not. It's just very sound and prudent risk management policies set by an independent majority board of directors that have the necessary experiences on the banking and the traditional banking, as well as the lending and risk management side of things. So I think firms need to assess whether they need to be licensed, they need to be aware of the regulatory regimes that apply to them and will soon apply to them. And then on the other part, I think beyond just getting licensed, I think the other thing that digital asset companies need to do is to assess investor suitability, to judge for themselves whether or not the products and services they offer can be understood by the clients that consume them. And then finally, I think all of us have an ongoing obligation to undertake investor education and thought leadership, right? I think we need to continually evolve the market. We need to continuously bring the best practices to bear and share openly and candidly with our clients and stakeholders the risks, the rewards, of course, but also the many risks that accompany investments in the digital asset space.
Thanks. So just for the next question, and we'll try and make this one brief. It's a question I hate to ask you, but it's very valid. It's one I've been peppered with since 2014. But given the fact that you guys were also early, it's the big trillion-dollar question. When are we going to see mass adoption of digital assets? So it's not just DeFi here that we're talking about. For context, obviously, crypto used to be literally in the millions, and then we were a few hundred billion, and obviously in the 2017 cycle, we got, I believe, up to 800 billion, and everyone was wondering, will it go to, 1 trillion? And of course, last year, we eclipsed 3 trillion, and I'm guessing we're around sub 800 billion. Now, I appreciate that actually doesn't give you the full picture, because actually what a lot of people miss about DeFi and crypto is the most interesting thing is actually not the price. It's actually what's happening in regards to the change in governance and models and so on. But with that said,
Sure.
Mass adoption, is this going to be a tipping point? Is this going to be over time? What's your thoughts?
Yeah, I'm going to answer, and I'm sure there are others chomping at a bit to respond as well. I think you started with a definition, and so I think it's important when we talk about digital assets to understand that it's not just one single thing. It used to be that digital assets were synonymous with cryptocurrencies, but that's no longer the case, right? We have subcategories of digital assets, including crypto assets, but also security tokens / asset-backed tokens, and finally you have your central bank digital currencies / private stable coins. And each one of them is, I would say, at a different stage of adoption. Arguably, cryptocurrencies have already passed that tipping point from mass awareness into mass adoption. I just was reviewing some of the literature and the surveys that are coming out from the Accentures and the UBSs of the world. In June, I think Accenture estimated that in the region, Singapore, Malaysia, Thailand, Philippines, and Japan, I think, or Hong Kong, more than 52% of mass affluent investors already had invested in crypto. or held crypto, on their books. I think UBS had a report in the same time frame that suggested something similar. More than a quarter of wealthy family offices had already invested in crypto, and another 30% were looking to get in. So, cryptocurrencies, I would say, they've already passed into. I think they've passed the trajectory is really onwards. If they're not really mass adopted, they are certainly well on the way to being mass adopted. Now, when it comes to, and I'll just won't address the CBDCs one. I think that one will move on its own timing on the basis of what the regulators deem is an appropriate cadence for these projects to be launched. But for the tokenized assets, so asset-backed tokens, security tokens, I think quite objectively, the asset class hasn't lived up to market expectations, right? I think that's putting it mildly. I think tokenized assets, when we were reviewing our business case in 2017, there were wild predictions that by 2021, we would see more than $2 trillion of asset tokens. I think last year, when we were looking through the results or the data, it seemed like if we achieve even 200 billion, that would have been a strong outcome. So we're off by a factor of 1,000x, pretty much. And I think there are many reasons why asset tokens haven't taken off. And there are many, I think some members of the audience that are probably more well equipped to describe those problems in detail. Sygnum is also has not given up on that front. I think we are the market leader in Switzerland. We have tokenized over 300 million worth of assets, continue to be pioneering new asset tokenization projects every day. But I think the challenge there is one of investor education and awareness, and also finding the right issuers or right products then to tokenize, and that continues to be a evolving situation. I would just make one plug there for a project that
a lot of people are just waiting for a date. It's like 9 months from now. Is it?
Yeah, no. I was going to say.
Okay.
Final comment. I say sorry for hogging the time, but I think for us, tokenization in the current form is probably less interesting than the hybridization of asset-backed tokens with utility tokens and NFTs, and offering them in a fully regulatory approved sort of format. And on that front, just bookmark it a little bit. We have an announcement in a couple of weeks with one of the leading traditional companies in Asia that are launching its own metaverse, and we are going to be we've been mandated to help run a hybrid security and token issuance, and I think this is really the future of digital assets, and combining cryptos as well as asset tokens.
Okay, Jeremy. Last but definitely not least. So the first question I have is just a personal one, because I looked at your profile and I was like, this guy's insane, right? So being a student of risk reward, trader, investor, strategist, everything I look at as a cost-benefit skew. So you go into all the top-tier banks, Goldman, Morgan, and I'm paraphrasing some of this, so excuse me. Start in structured products, end up being the CEO of Leontech, which is best in class, known in the finance space for their structured products, very good firm, excellent culture. You then start out the Asia office of one of the biggest known exchanges out there, which is Gemini, which should be the mother of all retirement trades, right? And then you leave. So, with that in mind, and obviously, however much you can share, what was kind of the rationale behind that? Because obviously they're considered potentially one of the better exchanges out there. They were very pro-regulation before a lot of other people were, which was very unpopular, of course, also back then, right? So it's also interesting to see that big move back. So I wish you could maybe shed us a bit of light on that, if you don't mind.
No, sure, absolutely. When I started the Asia business for Gemini, that was early 2020, which kind of coincides with the bottom of the previous crypto cycle. And 6 to 9 months later, then we have the mother of all bull market. So just saying, I'm starting now Open Eden. I'm not predicting what's going to happen in the future. But I think, at the end of the day, it is very much related to promoting adoption. Gemini is clearly a very reputable and regulated exchange. But for the most part, it is targeted at retail investors. And at least in my view and my partner's view, is that in order for digital asset and as an ecosystem to truly grow, I think what we really need is for institutions, like many of you sitting here in this room, to fully adopt and embrace. But at that point, we feel that in the market, there isn't enough platform that has that focus. I mean, for good reason, because the retail market was more ripe for adoption. And, I've worked in banks for 20 years, and I understand how difficult it is to go to your compliance or legal team to get them to approve a new product. And I think because of that friction, most of the platform decided to focus on retail. But we truly believe that it is a technology, it is an ecosystem that institutions need to be involved in. But the only way for them to be involved in is really having regulatory oversight, having proper compliance and transparency. I mean, I don't know. How many of you here watched English Premier League? Okay.
Oh, come on, there's got to be a lot more people out there.
I know we missed the game over this weekend, but essentially, it is like the ecosystem is like a game of football, right? Football is a beautiful game. I'm referring to the British football, by the way. And regulation is not really here to change the way football is being played, right? It is the same analogy that I would think of as having your linesman, your referee, and I think even until most recently, your VAR, right, your virtual assistant referee. And it is to basically ensure that the game is played in a way that there are rules. And if you think about true freedom, right? People think about decentralization is like freedom, but true freedom can only happen when there are boundaries and when there are rules and there are framework. So people, the players know exactly how to play the game. And I think that's why we decided to set up Open Eden to be able to create a platform that is regulatory first, that has compliance in mind and transparency, and offering that investable layer for institutions to begin to kind of step foot into the digital asset space. So asking an institution today to kind of set up a MetaMask account, an online wallet, and plug in, converting your US dollar into stablecoin and then, putting liquidity provisioning into different pools is probably a little bit too much to ask for in 2022, hopefully in 2025. So they need a bridge. And we want to ensure that this bridge, does not compromise the ethos of, decentralization, but at the same time, providing that platform that is trusted and have proper framework to ensure that the bad players will not be able to kind of take advantage of the fact that it's unregulated and whatnot, and to do things that will harm, consumers at the end of the day. So that's a very long answer to my question, but that's why we decided to build what we're building Open Eden.
No, I appreciate that, and that also touches on this question about regulation and obviously the shift that's kind of been happening. With that said, and this was thematic to the last panel, it's of course a big critique for the people who look at crypto as an asset class for the first time. To say we've seen volatility is maybe an understatement. Going from 70K to 17.5 on BTC, and of course, some tokens have gone to zero. Obviously, these are not the same things, right? But it's also interesting to see that DeFi has continued to function throughout, right? The algorithms, the clarity, everything on blockchain has functioned as per the code. But just, given recent volatility of digital assets, what's your viewpoint when people ask, is this still a viable asset class for investors' overall portfolio construction, or people may be thinking about that from too linear a sense? I'd love to get your take, and then I'd also love to get maybe Katherine also weighing in on that.
Yeah, sure. Today, I think number one, full disclosure, and I'm still holding on to my Bitcoin or Ethereum, and holding on to it, because I believe in it. Now, I think taking a step back, right? If you look at the digital asset space, it is not only about token or crypto prices. So that is almost like, in drawing an analogy to the TradFi space, is equating crypto token to equities or stocks. And we all know that, the whole financial market, is just not consists of the equities market. In fact, there is also credit market, which is 5 times larger than equities market. So there is actually also a credit market that exists in the digital asset space, and it's still very nascent, and it is actually in a spot whereby the risk-return profile is very interesting, because if you look at a credit cycle, using a TradFi type of kind of analysis, we might have already seen the peak default, and we learned about all these major default, like hedge funds and lending platforms, and so there's a flush out of the poor or credit unworthy borrowers. So what you have left behind in the systems are actually companies that are battle tested to a large extent, that has demonstrated they have got good risk management, good business model. They're still surviving and thriving. But on the other hand, the supply side, has been severely handicapped because, obviously, they got impacted quite severely on the balance sheet. So you are in this environment whereby there's a shortage of lenders in the market, and there are strong credit-worthy borrowers, and at the same time, credit spread has widened massively, both in TradFi and also in the DeFi space. So I would say that the credit market within the digital asset space is actually something that is very interesting because obviously it is not as correlated to crypto prices and not as volatile. So I would say that clearly crypto prices, I personally feel that there's a long-term prospect to that. But I just thought it would be interesting to highlight there's also a very interesting credit market in this space.
All right, great. Well, actually, let's switch stuff. And Katherine, I want you to kick us off. But this is going to be kind of closing thoughts on what are you most excited about? Could be DeFi, could be digital assets, it could be the firm where you're at. It could be, let's just got the blank canvas. So.
Yeah. Honestly, this panel has been all about DeFi, but ultimately I'm long the tech. And September is a special month for me because this is the 4th anniversary of the Tezos mainnet launch. So it's since we went on live in 2018. So I'm long the tech. It's definitely going to stay. And that's what other venture builders and crypto VCs in a space like A16Z or Katie Horn will think. And it's ultimately, okay, where are your favorite adoption verticals? Mine is the creator economy, because in the past 4 years, when I started looking at Bitcoin, it was all about Bitcoin price trends dominating Bloomberg headlines. And eventually, in the past 2 years, it was all about NFT art dominating mainstream headlines. And that I see has been a more inclusive narrative for mainstream adoption. So you have like Gen Zs just walking into art exhibitions and just scanning QR codes and like just buying NFTs off open markets. So this is really cool for us to see as an ecosystem, and Asia as a region has strong growth potential for blockchain adoption in the NFT space. So watch out for that.
Awesome. Anton, 20, 30 seconds. What are you most excited about?
Actually, I'm really excited about the tokenization of physical assets. We talked a lot about financial products today, but I think you talk around credit markets, for example, which I agree with, but there's a whole world out there of real estate and property and chattels that we own that could be given digital identities and could be put into the decentralized finance world. That would help with redistributing assets, and also would help with things like climate change and climate risk and rising sea levels. So that's the one I'm going to follow. And just answer your question before around how long? 15 years, I reckon.
15 years.
No
right.
time soon.
Appreciate that. Gerald, 20, 30 seconds. And outside of Sygnum, what are you most excited about in the space as a whole?
Yeah, I mean, for me, the most exciting thing is to work together with all of you guys, panelists, as well as the audience, to onboard the next 100 million investors into crypto and digital assets, right? I think the first 100 million wallets that we all know about have been characterized by direct token investments, so buying your Bitcoin, buying your Tezos directly. The next 100 million investors to come in will constitute clients of yours today, and they will be investing not just through tokens, but through fund products, through structured products, into tokenized physical assets or NFTs, and they're going to need the same kind of guidance and advice that traditional asset managers and fund managers, wealth managers provide them today. So I'm very excited to be part of this global movement.
Fantastic. Jeremy?
Yeah, I think what excites me the most is to be able to bank and serve the Web3 builders, to be able to finance the brightest minds that have taken that risk, to jump onto this digital asset journey. And as we're all aware, they are actually a group of unbanked people, unbanked companies. And that's why Open Eden is building this debt capital marketplace to able to connect them with institutional capitals, hopefully like yourself, to help them build up the future of finance.
Fantastic. Can we please give a big round of applause for the audience here and the panelists? Great job.